Hi everyone. Today let's talk about credit card delinquencies, as well as max pain. Then we'll take a look at the charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at credit card delinquencies in banks outside of the top 100 in terms of assets, you can see we are at record highs here for delinquencies on credit card loans, whereas the top 100 banks are continuing to do a little bit better. And in terms of scale here, you can see 2008 crisis, we were up around this 5.5% in the peak, and currently we're sitting above 7%. Definitely interesting. You can see they mentioned here we are closing in on 8%. And the question is, what exactly does this mean for those regional banks? Is this going to put more stress on their books? They're already struggling with rates going higher and bond prices going lower. But the question is, what happens now? And will this create a bigger problem going forward? Moving over to max pain just for a moment, you can see we were basically unchanged on the day. We were right at max pain yesterday, and that's basically where we finished. Put call ratio still at 2, 1.5 million options on the day, right in the middle of the range, not bullish or bearish, and we were neutralized on the day. Moving over to the charts, looking at the SPY on the hour and the daily, you can see we threw some wicks to the upside at the 55. Initial test usually gets broken, so we did break down from that level. Continue to establish higher lows here, but not above all of the EMAs and SMAs quite yet. You can see the daily chart looked like an initial test of higher prices after this couple of days of down move. Momentum still fading, but if this is an initial test, that means we should be looking for some more upside into next week. You can see we're right at this highly traded zone. If we can get above that and push into this next zone around 450, that would be interesting. And then my next resistance would be this previous high here at 453.07. Moving over to the NASDAQ here on the 15 and the daily, you can see what that looked like. Consistently higher lows, very similar to the SPY. Initial test of the 200 SMA here on the 15-minute chart. Again, initial test usually fails. Got the breakdown, and then we found some support, higher low, rallying into the after hours. We're definitely consolidating sideways here, but we did find a little bit of strength again on the day. Initial test candle on the daily chart. Momentum not supporting it yet. Volume was quite low, so maybe not looking for follow through yet. But if we can get above this 200 SMA on the 15-minute chart, push up to 376.45, that would be quite interesting. Obviously, that 200 is going to be heavy resistance, as well as the 9 EMA here on the daily chart sitting at 374.60. But overall, looks okay, coming down to that 21 EMA here on the daily chart. Moving over to the Russell and the Dow. Russell did basically nothing on the day. Absolutely flat. Tried to test the 9 on the 4-hour chart and then broke down to this previous low. Still holding above 183.28. Dow continued to rally a little bit, hit the 21 EMA on the 4-hour chart. Momentum continuing to tick bullish. This looks like the strongest of the group still. But again, you want to see it get above this level, push up to 347, break that, and push back up to these previous highs at 350.92. Moving over to Apple and Tesla. Apple rallied up, hit the 9 on the 4-hour chart, broke down from there. Looks very similar to the hourly charts on the other ETFs that we looked at. Momentum starting to tick higher here. Again, did not take out those EMAs yet. You want to see it get above 178.58, hold above that level, and then rally up to the next one. Maybe this establishes a higher low, looking for that rally. Not quite there yet, and that news about China banning iPhones is certainly weighing on the stock. Tesla continues to chop in this zone. Very little movement on the day. Moving over to staples and discretionary. Staples continues to find a little bit of a base here. We're still below most of the EMAs and SMAs, so still a bear trend, but we're above the 9, we're above VWAP, finding a little bit of strength. Discretionary breaking down from this level at the 200 SMA once again. You can see we got above it just for a moment, broke down pretty heavily down to the 55, and now we're chopping in this zone. And definitely looks like a consolidation between 166.78 and 170.68. Moving over to breadth. This is pretty interesting here. So we have the 50-day average continuing to doji at support, while the 200-day average is still making some new lows. Looking at momentum, we're starting to flatten out on the 50. We're still holding above the SMA. This seems like an area where we're going to find some support and find a little bit of a rally. But the 200 is still pressing to the downside, closing on a new low, taking out this previous low, taking out the SMA on the RSI. So we got a little bit of divergence between the two charts here, waiting to see which way we follow through. Does seem like we have early indicators of support, but we're just not holding up yet on the 200. Moving over to yields. Yields rallied on the day, still chopping the same zone that they've been in for at least the last 3 days, and you can see on the 200-day average, we've actually been in this zone for a while here. Doesn't look crazy. 10-year yield, same for the last 3 days, not pressing up to new highs or anything. Still a bull trend, but this still looks like a lower high setup to me, and I'm waiting to see if we can get a little bit of follow through to the downside, which would give us some upside in equities. Moving over to the dollar, you can see we came down, tested this lower trend, rallied up, hit this top trend. We've been watching these for a little bit now, really giving us very little information. Daily chart, still slightly bullish momentum, still slightly overbought. Momentum on the hourly chart, however, is definitely fading, pulling back here. We have lower RSI reads from these previous highs. Definitely interesting. If this starts to break down more, again, that should be a little bit bullish for equities, but it's not happening quite yet. We still found support after attempting to break down. Moving over to volatility just for a moment, MOVE index continues to break down, VIX continues to break down. Interesting considering we didn't really get that much of a rally, but it is interesting to see volatility leaving the markets without any real strength to the upside. Moving over to my accounts, you can see I have the exact same position here for the IWM. We'll see if these shares get executed on this 184 call. Either way, not bad on that take. If they get executed, I'll look to sell a put. Otherwise, I'll sell a call on Monday. We'll see how that plays out. Qs, still have my 200 shares. I did add to this position on the rally as my level broke, but then we broke back down and I had to take those positions off. I did sell a 369 put, which has a little bit of a profit here. Probably should have taken that off for September the 11th. Otherwise, I have a 371 call still for $2.61. And then I have a 374 call for Tuesday. So still basically neutralized on the Qs. Let me know down in the comment section what you think of credit delinquencies in the regional banks. Is that a bigger problem, or is it just a short-term thing that we probably don't need to pay attention to? Definitely like and subscribe if you got any value out of this video. Make sure you check out the Sunday video where we go much deeper in the charts. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.